Ladies and gentlemen, and welcome to our morning market review. You're truly Dumitru Rusu here, and today we will revisit our review on gold prices made on 19th of March. The current trend of gold prices has declined since Wednesday in anticipation of the announcements to the outcome of Fed meeting yesterday. After the regulator announced to abandon two rate hikes this year, the instrument quickly went up, despite the fact that this decision did not come as a big surprise. Additionally, support for gold is still provided by the uncertain prospects of the US-China trade negotiation, as well as the dragging Brexit process. Yesterday, investors paid attention to announcements such as Fitch rating agency on the growth rate of the global economy. The growth forecast of 2019 was revised from 3.1% to 2.8%. Next year, the global economy may grow by 2.8% instead of the forecast of 2.9%. Moving along to our charts, we are looking at the 1-day time frame. And as for support and resistance, I will show you the easiest way to find those levels using a free expert advisor that you can download from your NT4, and it's called Murray Math. So once you download it, you simply go to Insert, Indicators, Custom, and choose Murray Math. You apply the settings, and there you have it. You have all the resistance and support lines with different levels, obviously. But we are still on the one-day time chart, and Bollinger Bands are reversing upwards. The price range is expanding. However, if it fails to catch the development of bullish dynamics, if we move to a 4-hour time frame, we will see that the MACD indicator is growing and it's preserving a stable buy signal, and it's consolidating above the zero line. Stochastic also demonstrate a similar dynamic. However, it approached its maximum level, signaling an overbought instrument in the ultra term short. The trend currently shows the indicators do not contradict the further development of the bullish trend. And as we can see, we have resistance, and the first resistance we have it at, let me remove this real fast. To make it much clearer. So as for resistance, we have our first resistance level that has not been tested yet at 1320.90, with the second resistance at 1326, the third resistance at 1332.90, and the last resistance at 1336.60. As for support, we have our first support at 1316.70, our second support we have it at 1308.90, our third support we have it at 1350, and our fourth support it's sitting at 1292.70. As for trading tips, we will give out a trading tip that is viable for 1 to 3 days period, and we are starting with the bullisher one. So if we are opening a position, a buy position, we will use a buy stop, and you can rely on the breakout of 1320.90 as your entry point, and you can have two exit strategies with a take profit of for the first strategy as 1332.90, or the second one at 1336.60. Your stop loss should be at 1313.0. If things are not going as expected and a rebound should happen, then the level for the rebound should be expected at the level of 1320.90, and as a resistance, obviously, and you will be following it by a breakdown at 1316.70 or at 1316. It may become a signal of corrective sales, but in any case, you should use a sell stop with a target at 1350, excuse me, 1300.50, and the stop loss at 1320.90 or 1323. That's it for today. Like always, I wish you happy trading and every success. Thanks for watching and see you next time.